The wealthier people get, the bigger the tax bill becomes. With that being said, no matter what bracket you fall into when calculating tax, it always stings when parting with a chunk of your hard-earned cash. But are there legal ways to avoid paying taxes? Welcome, Joytimers! I hope you have an awesome week so far, and I want to congratulate you on crushing your goals and making a choice to watch this video, while everyone else is binging Netflix. In today's video, we'll share the different ways rich people manage to avoid paying millions of dollars in taxes to the government, which might just apply to you also. By learning the different methods that keep the rich even richer and the strategies put in place by those managing their finances, you too may discover things you are entitled to when it comes to keeping your money. More importantly, you may discover the lack of entitlement of those claiming taxes from you. Benjamin Franklin once said, "In this world, nothing is certain but death and taxes." Well, in this video, we will show you several ways that prove that isn't strictly true. Now, the part about taxes anyway. Number 9. Strictly business tax write-off. A time-old way of avoiding certain taxes is to start a business that not only generates a healthy profit, but also benefits that person. People who hold a high position in a company have access to tax deductions, tax credits, and tax write-offs, as long as they come under the umbrella of appropriate tax exclusions. A tax write-off is when purchases can be deducted from a taxable income, reducing the amount a person pays the tax man. It basically means you pay fewer taxes by spending more through the business account. An example of this would be a boss who buys a brand new car who then deducts the vehicle from their taxable income. They may be spending money on the purchases, but at least the amount of tax owed is reduced, meaning they get to keep more of their money and the things purchased with that money. This is why you'll see rich people invest in businesses that involve their interest or other ventures. They can benefit from letting the business expenses cover certain outgoings while also reducing their taxes. Number 8. Stay rich by having no money. It may sound backward, but one of the best ways to avoid paying taxes is to have no money. If you have no income, then you cannot be taxed. To do this, rich people hold off on taking cash as much as they can, and when the money does start piling up, they invest it straight away. The reason for this is because profits that are reinvested cannot be taxed. By doing this, rich people will not only get a return on the money they have invested, assuming that they made a good decision, but they'll also dodge a huge tax bill that will help them make even more money the following year. An example of this would be the hair salon that turned over a large profit. By reinvesting the money into renovating the shop, replacing all the tools, restocking products, and starting an extensive marketing campaign, it'll prevent a huge tax bill from coming in. If the money was just going to the tax office anyway, why not use it to improve your business? Which in turn would generate more profits going forward. Number 7. Moving to a tropical U.S. territory. Another popular way that the super rich avoids paying taxes is by moving their business to another U.S. territory. Often, tropical locations like Puerto Rico are chosen for their beautiful beaches, hot climates, and, of course, the lack of taxes. Those who move their money to Puerto Rico can benefit from the Act 20 incentive, which is also known as the Export Service Act. The act basically offers business owners as low as a 4% export income tax and 0% tax on earnings if the company was relocated from elsewhere in the world and is exporting from the island. The types of businesses that qualify for these incredible tax reliefs include, and are not limited to, advertising and public relations, consulting services and any trade of business, commercial art and graphic services, and Department of Computer Software. With several of these jobs becoming remote since the pandemic, those who relocate to Puerto Rico can still keep their old client base from elsewhere in the world, but enjoy the benefit of not having to pay large portions of their profits in tax. Number 6. Investing equals low taxes. Investing in the right stock can be profitable regardless, but for those investing, there are ways of them keeping more profit by manipulating the tax requirements. This is because when it's time to sell, the taxes are usually lower than standard income as long as the equity is held for longer than a year. While this sounds really risky, many of the people doing this can afford to take the dip in stock value. And if it pays off, the long yield investment could result in a serious payout. Those who do pull out early, however, still fall into the federal tax bracket and are taxed on their income. As strange as it sounds, some of the affluent community purposely choose to lose certain gains on the stock market if it means that the tax savings will be greater than the profit intentionally lost. An example of this would be a person investing in low-income communities or investing in high-risk investments to manipulate the figures to best suit them. This, of course, takes a lot of calculation and strategy, roles that are assigned to the skilled financial advisors that are on their terms. Number 5. Taking advantage of estate and gift exemptions. Gift and estate deductions go a long way in reducing taxable income, but there are opportunities to reduce it even further. A tax law passed in 2019 temporarily doubles the deductions, with people able to claim up to $11.2 million compared to the $5.3 million previously offered. As this exemption doesn't exposure until the end of 2025, the rich are now settling trusts, which means that the money is passed down to the next generation, but is not taxed as a gift and will not qualify for estate tax. This, of course, allows the family to keep more of the multi-generation trust, money that can then be reinvested in other family ventures. Number 4. It pays to give to charity. Giving money to nonprofit charities has been a way for the rich to get a reduction on their taxes for years. Since 2019, a tax law was passed that increased the amount of tax reductions from donations to charity from 50% to 60%. One way that the wealthy has been using this to their benefit is by creating conservation easements, which is a program that allows the easement holder to protect natural and historical features in open space areas. This also includes protected endangered species, industrial works taking place on Greenland, and contamination of rivers and lakes. While this might come across as selfish, this is a win-win for the easement holder, as it saves not only natural areas from being built up with buildings, but also spares historic buildings from being destroyed while saving a lot of money in taxes. With that being said, giving to charity only works if the right criteria is met. The Tax Cuts and Jobs Act doubled the standard deductions to $24,000 from $12,000 in 2018, which means those looking to save more will have to look for alternative methods to reduce their tax reductions further. Number 3. Managing personnel assets like it's a business. An effective way to reduce your tax bill is to create a management structure, like an LLC, known as a limited company, to manage their investments. This could include stocks, real estate, charities, and of course, a company. Now, it's a little complicated, but some people even create a governance structure for their assets. This means that the person with the LLC can get a reduction on their taxes if they look over and advise other owners of assets under the limited company. Number 2. Thinking to the future and saving money now. Similar to a traditional pension plan, a defined benefit plan lets company owners contribute large sums of money towards retirement schemes, which will see a substantial reduction in taxes. This could mean savings of upward of $250,000 a year. This is a great way for high earners to set aside tax-deferred cash to use elsewhere. This is appealing to the wealthy because of the 20% qualified business income deductions, which currently has a cap of around $157,500 for individuals and $315,000 for married couples filing together. By contributing to a defined benefit plan, the taxable income will be reduced and may even bring them below the threshold for their assets to meet the 20% deduction requirements. Defined benefit plans don't always work for everyone, however, so it depends on if it's a fit with their retirement savings plan and the amount of money that has to go into the running of the business. Number 1. Nothing lasts forever. Tax reduction through depreciation. Another way that rich people decrease taxes is by taking advantage of depreciation tax relief, which bases the tax of an asset on the age and life expectancy of it. For example, if someone purchased a brand new yacht, then the asset only has a number of years until it is no longer usable. This reduction of value can be used to offset income tax and can be applied to buildings, cars, machinery, and tools associated with the company. It also covers things like copyright and outdated software. Depreciation is one of the top ways the rich save on taxes, and in some cases, can even bring the taxable income to negative figures if done properly. One of the most common ways to use depreciation is through real estate, which allows a portion of tax to be reduced each year. After 27.5 years, the savings increase exponentially through depreciation, with the maximum relief amount being deducted from the net income accumulated from renting the property. This means only the difference in profit is taxable. As the depreciation increases each year, after around 30 years, the money made from renting a property can be completely untaxable, depending on the initial purchase price. The rich will continue to find loopholes in tax laws or take advantage of any relief schemes passed. There are many reasons why opportunities to dodge tax arise, whether it's to support an economic crisis or to help with financial growth in certain parts of the world. All this precise planning comes at a price, however. But when they are saving millions in taxes, they can probably afford the service of an accomplished financial advisor. If you've enjoyed this video and like to see more business topics covered on Daily Joytime, make sure to hit the subscribe button and ring the notification bell. That way, you'll never miss out.